off our third and final panel, As You Eat. I'm Prabal Chakrabarty, Senior Vice President at the Boston Fed and the moderator for this panel. I want to say how delighted I am that all of you are here and participating, and also that you're all eating quietly. That's very appreciated. We have a panel, however, that I think you'll have no difficulty in hearing. They have a lot to say. This third panel is really to hear about perspectives from different groups, and there's a multiplicity of groups here. I'm going to let them talk about sort of who they're representing, but I want to say it's all of us here together are here as a little bit of sort of Fed history is being made today. Certainly, this is not the first time that we have heard from the public on monetary policy. We do this through a number of mechanisms, nor is it the first time that the public, through these groups, talks to the Fed about monetary policy. You all do that through a number of mechanisms. But it's the first time that we've done it in this way, in this kind of an open format, with dialogue, with panels and questions focused around monetary policy. So you're a part of Fed history here today. So I want to remark on that. I think a second thing just to remark on is sometimes it's sort of monetary policy is thought of as being very technical and discussion of, with experts, and then we need to talk to the public. And I think one thing that's being broken down a bit here today is other kinds of expertise, right? And you've heard that through these other panels. All of these people are experts. They're experts in what they do, in their professions, in who they represent, the types of businesses they run, and the groups and associations that they're part of. So this is really, it's still a discussion amongst experts, but it's acknowledging all the different forms of expertise. So with that, I'm going to now turn this over to our panel. I'm going to give each of them an opportunity to say who they are and who they are representing. And I'm going to start over here with Tia, and we're going to move over Tia, Kesha, Glenn, and Vanessa all the way. So please.
Okay. My name is Tia Murphy. I am a recovering corporate executive. And this is part of my 12-step program here, being involved with AARP. But let me just, in all seriousness, I am not on the insurance and discount side, which is what most people know AARP is. I'm on the non-for-profit side. So what do? We do community engagement, we educate people, and we advocate on behalf of people who are 50 plus. So 50 to the end of your life. Here's something to think about. Every time you take a breath, you are granted the beauty of aging. Okay? And we here at AARP are trying to disrupt people's thought about an aging process as being something to resist because, quite frankly, we keep breathing, and as long as we're breathing, we're aging. I think the other thing to remember is that if you retire today at the age of 50, your chances of living to be 80, 90, 100 are substantially greater than it has ever been before. What does that mean? It means that you're going to have to fund a retirement that will probably last as long as your working career. With that, I'll turn it over to my compatriot.
So I sat down and I said to Tia, I started in the state legislature in Vermont when I was 22. And a member of the legislature who had served in World War II, who was into his 90s, came up to me my first day and said, "Hi, you're my bracket. You're the young one, and I'm the most young at heart." He was a lovely counterpart for me. And so hopefully we can offer some complementary perspectives generationally. The team was really steering me toward trying to speak as a millennial. And I have to take a step back because I think in some ways my story is very millennial, and in other ways it might not be. I grew up in my Indian immigrant father and Jewish American mother's Irish pub in Los Angeles. So I highly recommend food service and pitching into a family business as a way to really understand the economy from a young age. When I was headed off to college and thinking about colleges, my mother said, I want you to follow your dreams, but there's also no financial resources there from our end to help you do that. So you really need to look for a place that gives you good financial aid. And really, in the end, following your dreams is what you do after college, so don't saddle yourself with debt. That led me, and for many other reasons like clean air, to the University of Vermont, where I went to school. I stayed for, the sense of community there. And when I was a senior, it was 2008. So the bottom fell out of the economy, and we as young people were lucky if our parents still had a job, still had health care that we could attach ourselves to, or even just had a couch for some of us to sleep on. It's the same year that I ran for the state legislature and was, not just asking people for a vote, but asking people for a job. And I was grateful that it worked out then. I had many legislators say that they had shoes older than me. So I had a very different life horizon, with the average age in the legislature being well into the 60s. And at the same time, I was always looking to find common ground. So I don't come to you today to say, here's what young people think or feel. I learned in the legislature that if you act like the youngest person, set yourself apart as the youngest person, people are going to treat you like the youngest person. And we have a lot in common in terms of, how young people are trying to move forward from past generations. But there are certainly some things I think other young people want me to share with you today. And my theme throughout this is going to be that there's this spectrum from, apathy to despair to rage among young people right now about how they feel around the economy, and we have to intercept them before they get to that despair and that rage.
Great. Glenn. We're here representing.
Yeah, so if Tia is a reformed executive, I'm a reformed entrepreneur, who actually spent the last couple of years at a bank of all places. But I guess I would just introduce myself as someone who's really interested, unfortunately, in this issue that's growing, which is kind of the issue of the two worlds. And so my focus has been with the bank, focusing on scaling up Black and Latino businesses. And we approach it really because not that it's an issue that just started today, but this is something that's been building really for centuries in this country. And so we approach it with that type of layered, intensive, and thoughtful approach. And a couple of things that we do, and we'll get into it a little bit later, is we really look at technical assistance and advisory services for folks, because in a lot of ways it's access to networks and access to these tools, which also include capital, which we will be getting into, and contracts. And so, unfortunately, too many folks are living in a separate world, and we're trying to mitigate that to really help scale these companies up.
Great. Vanessa.
Good afternoon. My name is Vanessa Calderon Rosado. I am the Chief Executive Officer of IBA, Inquilinos Boricuas en Acción, which is a nonprofit community development corporation in Boston's South End. The work that IBA has done for the past 5 decades is to develop affordable housing. They got into this quest as they wanted to revitalize the neighborhood back in 1968. When the city had planned to bulldoze the neighborhood and displace the families, mostly Puerto Rican families that lived there. So on that quest, they created IBA to develop housing, revitalize the neighborhood, and create a number of programs, educational programs, economic development programs that we still hold today in our community. So the core of the business of IBA is affordable housing. We own and rent nearly 700 of units, mostly in the south end of Boston. And in addition to the housing and the work that I do at IBA, I have been really involved with the Fed, so I'm really excited to be here and honored and grateful for the invitation, because for many years I have been part of the External Diversity Advisory Council with the president of the Boston Fed, Eric Rosengren, and a number of senior leaders at the Fed. And for the past 3 years, this is my last year, I have been a member of the Community Advisory Council to the Board of Governors in DC, helping the Fed understand the impact of monetary policy in communities of color and low and moderate income communities. the communities precisely that I've been serving for the past 16 years in my work at EVA and even before that in other roles. So I'm very excited to be here today and to talk about how the Fed role and the Fed work impacts our communities.
Great. Keep the mic, please, Vanessa. I'm going to have you start with the first question. So each of you have been given a series of questions, and you've heard some of these questions before, but we're going to get at some different perspectives here. The first, it's pretty simple, really. What are the benefits of keeping of tight labor markets, and what are the costs of tight labor markets? It's been talked about before. What do you think are the benefits, and do you think that we should be fostering conditions that lead to even tighter labor markets? And this is going to be a common question. Or what might be some of the costs of those benefits? So we'll start with Vanessa. We'll go through, and just a word of warning: I sometimes do interrupt to keep things moving, so I'm going to be trying to do that to ensure we have time for questions. So
Sure, I think that that's a fantastic idea of keeping it interactive. As you have heard before several times this morning, there's great benefits to have a tight labor market for low-income communities and communities of color, in particular the Latino community. There are great opportunities for labor participation. However, as we know, and the statistics show specifically in Massachusetts and in Boston, while the unemployment levels are very low, they're still almost twice as high for communities of color, in particular Latinos. So there's still some challenges in the participation of the Latino community and the benefits of a tight labor market. However, there is demand, and there are challenges to meet that demand in our community. Some of the challenges come in the shape of language proficiency. A study last year showed that in the Boston area, about 25% of the Latino community still are not fully language proficient in English, so that blocks some opportunities from the labor markets. Secondly, we have a large immigrant population, not only in Massachusetts, but across the country. Many immigrants come to this country with already credentials from their own countries, maybe doctors, lawyers, engineers, but coming here, they're faced with the barrier of being able to advance their credentials due to licensing and regulations. And we actually have seen that even in our work last year with climate refugees, Puerto Rican families displaced after Hurricane Maria that came knocking on our doors to our organization looking for support to resettle here in Massachusetts. Some of them were nurses, registered nurses back in Puerto Rico, or had other credentials, and then they had an issue in accessing those jobs that are well-paying jobs here just because of the licensing issues.
Vanessa, just to jump in for a moment. So because the labor markets are so tight, do you see businesses taking steps to, let's say, open up different multilingual sort of lines or engage in more training or invest in organizations like yours that reach out? Are you seeing that?
Yeah, we have seen that. We have seen the business sector really reaching out to attract that talent. And we have seen also an increase in businesses with language training and skills training, so they can support. And I think it was Joanne earlier who was saying, we take anyone and then we'll help them with training. So we've seen an increase in that.
Okay, so there is that plus side to it. Okay, great. We'll go. Yes, let's go to Glenn next. Yes, please, because.
I really wouldn't add too much to that. I do think that you have a high percentage of unemployment in our community, especially African American, similar to the Latino, that does not match up with the tighter market you see in terms of the numbers. I actually, a personal story, I am now been working downtown for the last few years, and you also don't see the diversity as you should, at some of the what we call the white collar and the high employing industries, what we call the higher paying jobs, and that rolls all the way up through management. So I think there's opportunity at all levels to narrow that gap, really, from a racial lens.
So I'll try to answer this question from a rural perspective, which is that some of the benefits have already been discussed, higher wages. We have a lot of affordability issues in northern New England because you have, our inflation might go up and not match our wages necessarily. We all know that in Vermont, at least, that the price of milk is $3.99 a gallon, and we have to pay a lot of attention to how much things cost in our community. You also heard that people are starting to provide training as an employer. From the policymaker perspective, we're hoping to make it a partnership between higher education, government, and employers to make sure that, especially young people have the training that they need. Employers are a critical leg of that stool. And I think when they expect people to come ready, knowing a certain software package, et cetera, in rural America, that's a big challenge. So knowing that they have to take responsibility is important for us. Some of the things that I think the last benefit I would say is the reduction of stigma around jobs like carpentry, forestry, et cetera, because those populations, a majority 55 and older, and we need people to be thinking about the trades as an integral part of our rural economy, and they are more so. What I think is going wrong in rural America with this is the unevenness of wage growth. So you have towns where a restaurant is very progressive and they say we want to pay people $15 an hour who work as our wait staff, and the firefighters in town still make $11 an hour. And so, do we have people to meet the basic functions of government and our needs? Not necessarily. I think, another thing that I wanted to mention as well is when you think about, the lack of employment, for the lack of participation in the labor force. This gentleman mentioned it. For us, that looks like the opioid crisis in a very big way. Many of the men, they now say something like 50% of the men of prime working age who are not participating in the workforce, are not seeking access to a job, or taking opioids every day. And that's something that we see in the culture of despair that exists in rural America. Are those people that we can get into treatment and rehabilitate and get jobs? And I remember speaking to the chief medical officer in West Virginia, who said, we were supposed to use opioids to treat pain, but we're using opioids to treat suffering, which is someone can't get a knee replacement or get their teeth fixed or something like that. So when you see this cycle of medical debt and people accessing opioids to deal with their long-term suffering, you see a lot of unemployment in our areas.
Yeah.
Okay, so, well, let's think about this for a second. Over the years, people have thought of people 50 plus as a monolith, and it isn't. There are many different kinds of people and many different issues that are facing those people. One of the things that we at AARP did was, we used to be the American Association of Retired People, so that's what the RP stood for. It now stands for Real Possibilities. Why? Because one of the things that we discovered was more and more of our members and the cohort that we served, who are over the age of 65, which everyone thinks of as retirement age, right, were working. Whether they had to work because the Great Recession of 07, 08 is still reverberating within that community, or they wanted to work. Well, what's one of the things that happens? Well, if you are from the age of 50 to 62 and you lose your regular paying job, it takes you 3 times as long to find the next job, and you will typically be making 40 to 60% of what you were making previously. So if not only are you trying to save for that really long retirement I was talking about, but you have fewer and fewer resources in order to do that. Now, a couple of things to think about. One of the things that we were talking about here earlier was workforce of the future. And one of the things that we realized in Connecticut is we've always had a lot of manufacturing, a lot of advanced manufacturing. Pratt & Whitney was mentioned earlier. We have a lot of very technical kinds of manufacturing. And as Mike was talking about in the last panel, a lot of those people are retiring. So what happens? Well, Connecticut said, you know what, we're going to fund a program with our community colleges so that we can train people to get into that labor force. The only problem is, and they did that, the problem was they couldn't find instructors. Why? Because a lot of the guys who are retiring off the shop floor are not educated. I mean, they know what they did really, really well, but they weren't instructors. A lot of those people never went to college. So we got together with community colleges, got together with the state credentialing organization, with the unions, and actually had a program that is now being implemented where we can train instructors in a very short period of time, between 2 to 4 weeks, so that they can get out and get to start training people for the future. Because our biggest issue was not that we didn't have demand, we did, and it wasn't that we didn't have the educational space, because we did. It was, our gating factor was we didn't have the instructors. So now we're trying to do that. So, one of the things that I think the Fed can help us do is, how do we think about these things more innovatively? How do we look at those kinds of opportunities that match up government, private industries, and non-for-profits, and other kinds of entities to start to try and solve these issues? Because frankly, the issue is only going to get more and more as the largest growing segment of the population is over 85 years old.
So thank you for that. And we heard, I think, on balance, right, tight labor markets are a good thing. I didn't hear anyone saying they weren't a good thing. So maybe that implies a little bit of that there might be benefits going even tighter. I'm not trying to, everyone says what's on their mind. I'm just trying to bring out what your views are. I also heard a lot about barriers, different types of barriers. Many of those cannot be addressed through the Fed's monetary policy. And so you talked about sort of programs. The Fed does have a community development group, which I head here. And so we look at those things. But for this discussion, it really is about that monetary policy policy tool. It's a very powerful tool, but it's a very blunt instrument. It's not going to address all of these issues. But we are interested in the extent to which it makes some of these issues easier or more difficult to solve and to address. So with that in mind, we speak about the Fed's dual mandate. This is a language thing. When we talk about this, we imagine people know what we're talking about. That's maximum sustainable employment. Jeff covered this in his presentation, and low and stable inflation. So I want to ask each of you again, we're going to start here again and then go in reverse direction. When you think about these goals, is one more important than the other? And I'm going to combine this with the next question. Or are there other goals that you think the Fed should attempt to maintain? But if I could keep you on each of those pieces, is one of these goals more important to you than the other? Any context from the groups that you're speaking from? And then are there other goals that you think that the Fed should be trying to achieve? So.
Well, obviously, if anyone is looking at retirement, anything that impacts money growth is important. So interest rates are of critical importance to us. Rate of inflation is obviously very important to us as well. And especially if you look at, and don't mean to be too technical about this, but the Social Security COLA really does not take into account a lot of the issues, the economic issues that retirees face. It doesn't look at increase in health care costs and a lot of other costs. So those are the kinds of things that are really very, very important to our group, because the majority of Americans today do not have access to pensions. So they have to manage their own money. And as people have talked before, the American public is not particularly well educated as a money fund person would be, who is managing billions and billions, maybe trillions of dollars for large pension organizations. It's mom and pop people trying to figure out, is that a good fund? Is that not a good fund? What are the fees? How does that impact me long term? Those are the kinds of things that everyday people have to address.
Great. Geshe.
So I think our job as a panel is really to say it's uneven, and the people that we represent sometimes feel something very different than the average person in the economy. And especially, I had to look up what sustainable employment is, because I thought, sustainable for whom? We have a lot of seasonal employees in rural areas. That's how they make a living, and their access to banking and sort of security in their employment is very challenging. But other folks have talked about sustainability of, where is your childcare in comparison to your job? And at the end of the day, if you lose access to benefits, if you fall off that benefit cliff, is it worth it for you to work at all, or are you paying more in healthcare and childcare than your wage is? And for young people also trying to think about maybe taking on a mortgage, that's almost an impossible equation. So, you know, the trade-offs and calculations you have to make with sustainable employment is very challenging from the perspectives I represent. You know, with interest rates, I think that's where credit scores become really important. Young people have lower credit. They're in the 600 to 650 range, and that means that the interest that they take on is already higher cost, plus they are approaching $1 trillion in student debt. So I'm trying not to paint a really gloomy picture, but you know, those interest rates really matter when you're thinking about. I worked with a population of people who were victims of domestic violence, and when you have children who are being exploited by their parents, the first thing they might do financially is take their good credit and ruin it. And you have a lot of young people from disadvantaged backgrounds who might start out in the world with poor credit. And what that does to their ability to climb out of poverty is, you know, sort of almost impossible to comprehend.
Thank you. Sorry, before we move on to Glenn, a question here about interest rates and sort of student loans. Does that I mean, does it matter, or is it sort of one of those questions of if it's low around here, it doesn't matter much? I mean, just going through your cohort, has that been an issue?
So one of the articles I tried to read to really get a broad empirical lens on how young people and millennials are feeling is that they will often take those rewards cards, credit cards. They're more than 50% likely to want a rewards card that gives them a free cup of coffee or money back, or you know, a purchase that's discounted at a store. Even if they're carrying a balance, which means any of those rewards are losing their value right away in the interest that they're paying. They're taking on very high interest debt. And that's where I think it's beyond financial literacy. They think they're going to be in debt until they die. In fact, some of them know they will. And so they might as well get a free cup of coffee in the meantime. And it goes to that despair of like, I don't see a way out of this, so why don't I get some rewards on the back end? And we're doing that to 17 and 18-year-olds. They are having to make that decision, sometimes without their parents, at a time when they graduate college and they don't even know what they've done until they try to enter the workforce and purchase other goods and services.
Great, thanks. So definitely some consumer or educational issues here, or others, and we'll keep moving to Glenn.
Yeah, I mean, I think bipartisan, folks, is, you know, small business, strength of small business and growth is critical to stabilizing communities, and everyone wants that. I think the gentleman earlier, Mike, said it's, you know, 80%, 90% of those businesses fall in those categories of being small business. And I think what the Fed is trying to do is reduce the shocks of the boom and bust, really economy that we have. I don't know how many stories I've heard about entrepreneurs who went into business at the wrong time. And then just when, you know, the crash hit, you know, back in 2008, and the impact that has not only on them but the lives around them. So I guess from my perspective, it's how do you reduce, you know, those shocks so that the companies that we're working on currently can survive through what is everyone saying is the next projected side of the equation. I think to me that is that form of stability that I think impacts the folks that I'm working with.
Thank you. Yes, we see this all the time, the impact of monetary policy in our communities. Certainly keeping interest rates low affect low-income communities in a positive way. I mean, when you have access to build assets, right, through low interest rates, to buy a home, to buy a car, to get a loan, a business loan, to access capital for your business. So it's definitely beneficial. And we know in terms of small businesses, and Glenn knows this very well, that's the work that he does day in, day out, is that minorities, particularly Latinos and African Americans, are driving the growth of small businesses across this country. Michael spoke earlier in the previous panel that whoever is generating the capital growth in this country is not the big corporations. They do, of course, but it's really the small businesses and communities across the nation. So for those small business owners to have access to capital at low interest rates is fantastic. So it's really good. Now it has a downturn too, because then how do you balance that out with the inflation to keep the economy healthy? And that's the job of the Fed. So this is a tricky balance, but certainly access to capital at low interest rates is good for our communities. Another work that the Fed, or another role that the Fed plays that is important to is CRA, and that's not part of the the mandated roles of monetary policy, but CRA is important for communities of color as long as banks have a mandate, and we know that the CRA is going through modernization right now as we speak. But to the extent that banks has responsibility to invest in communities of color, to invest in economic development in different communities, it is important and critical, and the Fed plays an important role for that.
Thank you. And so it's great that you talk about that. And I'm going to start with you again here about the 2K goals. So this is the part where you give us a grade. I'm not going to force you to give us a letter grade, but really we asked this question of other panels to say, how well do you think we've done at achieving our 2 key goals? Again, it's the maximum sustainable employment, low and stable inflation. How well do you think we've done, and what's the impact been for the communities that you're representing? So we'll keep it with you, Vanessa, and move.
Okay. Well, I think this has been said before throughout the morning. I think the Fed has done a really good job in striking that balance. And I'm really happy that all of us are here this morning to talk about these challenges and these issues. I think the Fed, one of the things that I think the Fed needs to do more of, and this is a good example of doing that more of, is really promoting and marketing the role that it has played in having such a strong economy, and the role that it still plays in maintaining the strength of the economy. And I think that's we have to underscore that, and all of us here this morning to really talk about that in our communities and in our circles on what the strength of the Fed is. But overall, I think the Fed has done a great job in keeping a tight labor market, keeping the interest rates low. Not everyone benefits, but overall, we have seen that in this particular case, that proverb that, when one boat, English is not my first language, so I'm going to ask you for your help. When one boat rises, or when
Rising tide.
rising tides helps all the boats rise, right? That one. So I think in this particular case, that has been a reality, even though still some people have left behind. Because one of the things that we talked about earlier in the 2 panels is that we may have low unemployment, but there's still low wage jobs. There are a lot of low wage jobs. And the minimum wage here in Massachusetts is higher, and it's about to get higher. That's good. But think about it. Someone living at a $15 an hour job cannot really afford a home in their own neighborhood. They may have to drive from Rhode Island, like Mark was saying earlier, someone was saying earlier. So this is still a big challenge in terms of low wage jobs.
Great. Glenn, how are we doing? How did we do over the past decade?
Yeah, and I think I mentioned this to you earlier, is I believe, generally speaking, the Fed has done a good job. Unfortunately, I think it's alluded to, you're part of an existing system that has structural issues. And so I think, from my case, and we're now at 40 companies, these are some of the larger Black and Latino companies in this region, and they just don't have the same access to these lower interest rates for a number of reasons. And a lot of the folks who are responsible for distributing and investing that money have their existing setup. So we've taken philanthropic dollars from the private sector to kind of help solve this issue. That should not be our job. To really what we've had to do is create an opportunity for more growth capital to get to these companies, which I think everyone in this room would be in that motivated and incentivized to help grow these companies, yet the growth capital is really not available the way it should be. And what we see is we have like a 2-tiered system. And so the growth capital that's available and sometimes not accessible is at a higher rate, it's at higher cost. I mean, I still own a chunk of my company that I started years ago, and we've been around for 20 plus years, and we're in a growth mode. And the best deal we've gotten is over 10% in terms of interest, right? This is a stable company that employs a lot of folks in the community. So if that's just not equitable in terms of of making these opportunities accessible for the folks that we're working with. So I would push and say maybe it's a different panel, but what tools does the Fed have to really address that issue?
That's a very important point about the transmission, about what you're seeing in your community. So absolutely. Kesha.
Well, you fed me, albeit very quickly at lunch. So, we're supposed to say nice things. I mean, I would say
You can say what you want. And you get lunch even if you don't.
I would say this in a broad stroke. It could be worse. It could be worse. I think that's the motto of millennials right now. And I think there's some really key things, key interventions that make it clear what path we could have taken. And from someone who started in the legislature in 2009, that's most certainly the American Recovery Reinvestment Act and the ACA. Both of those tools together, I think, stopped a lot of bleeding in the economy over the last 10 years and made sure that people's medical debt doesn't balloon to the point that it takes over all of their other financial decisions. I feel like other good things have been due to your stability and due to your hard work. What I think you could do better, and what I also would say is one of your great tools, is having informed local and state policymakers. And so your research arm has been fantastic. I have, since I was, a new legislator, read Communities in Banking magazine cover to cover. I know you went digital. I'm a millennial who would say I loved the magazine. But your research arm has been critical in helping us advance policies that make sure we're supporting our working families in our states. The other role that I would love to see you do more of is as a convener. When we think about the future of work, there are a lot of people who don't know what that looks like and are very frightened. And the more you can bring experts and great minds together to help people think through what that looks like, your Working Cities Challenge, now your Working Communities Challenge, that's getting people thinking about their narrative in their local community of what's our investable asset, who are we as a community, what do we have to offer in the economy. There are so many towns who are hungry for that, and we're seeing new financial tools like opportunity zones come out, and rural communities have no staff capacity, no idea how to take advantage of financial tools that people are going to be using in a big way, maybe not to the advantage of local people in urban areas, but in rural areas, how we even begin to build investable assets and a narrative around that is something that, I've heard over and over again we need help with from our financial institutions.
Thank you. Yes, it's there's a number of things that are related to fiscal policy, and it's a separate piece from the Fed, but it's something certainly we need to take account of as we think about how to get growth happening in the economy. So, yes.
A couple of things to say. Well, I think the Fed's done a great job in keeping things stable, so that's been good.
Good. So everyone, so
I think we have consensus on
good.
that.
All right.
However,
good. Everyone gets dessert,
albeit,
but not coffee yet.
Okay,
I don't know.
okay. But one of a couple of things to think about. 83% roughly of the wealth in this country is held by people over the age of 50. Okay, so how do we transfer that? Okay, that's a big issue. Caregiving. Not only is it important for our members, because as we age, inevitably we need more care, and we are giving more care, because almost all of, Rosalind Carter had a great quote where she said, if you haven't been a caregiver, you will be a caregiver, you will need a caregiving, and you will know somebody who is a caregiver. So if you think about it, caregiving is one of the things that's going to impact all of us going forward, right? And it does today. It impacts women more than men. So into their retirements, a lot of women are more negatively impacted because they've earned less and they're recouping on their Social Security or their husband's Social Security or pensions at a lower level. So that's an issue. I think one of the other things to think about is people really want to age in place, and being able to sustainably stay in your home and have services there and have the technology around you to be able to assist you to adapt homes that are not necessarily built around. I live in a house that was built in the early 70s. You know what? The doorways are narrow God forbid I should ever have to have a wheelchair. And when I did have my dad home in a wheelchair, it was really hard to get him through the halls. It was hard to get him into the bathroom. All of those things have to be changed and adapted. So there's a lot of work that can be done to improve all of that, but that's going to take all of us thinking about this together and thinking about this in a different sort of manner than we have in the past.
And that's so interesting. As you was thinking, I was imagining, for someone who's a senior, I always thought of, they're dependent on their interest, on high interest and having interest rates, but there's also this interaction between their house, right? And in some cases they may want to stay, but in other cases they may want to sell, and there's an interaction in terms of interest rates in the housing market. There's just a lot of dynamics that are there, and I'd love to, maybe we can get a chance to tease out some of this in the audience part. So I know I have another question on interest rates. I'm going to come back to that. I'd actually like to flip a little and go to the audience first for a bit to ask questions of the panel. I'm actually going to even perhaps direct a question to President Rosengren as well, because they're here to listen, but also to participate. And so there's a mic out there somewhere, and we have a questioner. Great. If you could wait for the mic to get to you, that'd be great.
Hi, my name is Phyllis Barajas. I just wanted to ask Vanessa and Glenn and Kesha to expand a little bit more on what you were saying. I feel like we have an upside-down economy in terms of the workforce. We're getting younger in terms of median age of who's in the workforce eligible to work. And at the same time, the economic barriers that these individuals face to really be contributing consistent with the boomers who are, as you mentioned, 83% of the wealth. And so that's frightening to me. Can you expand a little bit more in terms of what can we do? I don't know if the feds can do anything except what you're doing right now is educate people on the necessity of engaging with, specifically I work with Hispanic, Latino professionals. How do we do a better job of bringing them into the workforce, commensurate with their abilities? We've talked about people who come to the United States with credentials that don't transfer immediately. That's not just, we keep talking about like it's their problem, it's our problem. I have somebody who took her 7 years to get back to where she was in Venezuela professionally. Look at the lost economic value that that woman's wages would have represented over 7 years. Plus, now she has to start that much later and older in terms of advancing in her career. But it affects everybody at the organizations that she works for. It happens in every sector, across every sector.
Great. I'm going to start, please, Vanessa. Yes.
Sure. Yes, that's an excellent point, Phyllis. I think that you said it well. It's our responsibility, it's not their responsibility. It's a collective responsibility that we have. I'm going to tell you a little bit about work that we're doing at EVA, and then kind of what the Fed could do along those lines as well within the role, which is
and as you
very
reply,
specific.
I'm sorry to interrupt. As you reply, if you could, any perspective on whether what's happening in the economy in terms of sort of monetary policy and interest rates in the labor market, whether you see it helping or hurting or not really making that much of a difference either way. It's sort of, because some of the points you raise, the question we have is, in a really tight labor market, does some of these some of these barriers get relaxed? Do you really see that? Would there be benefits from pushing even further? Or is it simply something else? It's something outside of monetary policy, and so it's something we shouldn't take into account as we're thinking about formulating monetary policy.
Sure. So several years ago, maybe 4 years ago, we started implementing a program in our in an affordable housing community with our residents to specifically work on financial empowerment and coaching, helping our residents understand, their budgets. That has benefits in keeping their tenancy because they don't have any rent arrears, etc. But also to really think about how do they use that tool to build assets. Last year, we have taken part into a national pilot on rent reporting to build credit scores. So we're the only site in Massachusetts doing this work. Another site is coming on in the second cohort this coming year. But basically, the idea is that we help residents to pay their rent on time and then report their rents to credit bureaus so they can use that to build their credit scores. The families that started participating with us this past year in this pilot, we already have seen 35 to 40 points going up on their credit scores. And then that goes together with, literacy, financial literacy. What do you do now? How do you pay down your debt? How do you negotiate lower interest rates from credit cards, etc.? So it has an impact, in doing this kind of work in communities and also with employers. So that will take me to the role of the Fed. I think this kind of work that the Fed promotes and has done for a long time now is like, how do we bring these kind of strategies to the workforce and to workforce readiness programs? So when people are going into this tight labor market, when they're accessing the jobs, that is still, in fact, having a positive impact in communities of color and low and moderate income communities, what kind of tools we provide to them. So not only they access the market, right? They get a job, but with that job, they get the financial acumen and wisdom to really use the money, build assets, etc. So I think those are things that are critical and important as we move forward, and that the Fed could definitely influence. As I mentioned earlier, in terms of the interest rates, lower interest rates have an impact for minority-owned businesses because they can have better access to capital. It's still a challenge, and one of the things that we haven't talked about for all the communities that we serve is the issue of equity. Equity on accessing capital, equity on accessing lower interest rates, equity in getting paying wage jobs, good wage jobs. So all those are issues that are on the line that the Fed doesn't necessarily can affect, because that's structural issues that you don't have a handle on, but that you can definitely influence.
Thank you. Anyone else want to weigh in this? I might go to a second audience question. Anyone else want to weigh in this question? Glenn? Sure. Okay, let's go to another question. Audience question. I know you have questions. I'm going to pause till I get one. All right, great, terrific.
Yes, so I wanted to talk about what you guys said about the type of the issue in terms of the type of debt. That is the real type of what I see is the real problem. And I don't know how that people can say that we have this wonderful economy, and it is just so high. It's with young people. I mean, there are some people out there, kids, right out of, in fact, school. They have about 180K of what debt and loans, and that's what all these kids, they are being straddled with all these loans. So you got these here with the schools are charging 40, 50, 60 a year, and these here kind of kids is piling it on higher and higher. And so what happens is that whole type of the cycle of these kids right out of school, and they're going to participate in the economy. Well, they can't do it, which is why you see stores such as Sears, Kmart, all of these places you're closing up because of young people cannot have anything, and no one's talking about all these stores gone because young people can't have it bought. The other thing is with the African Americans in terms of the equity stuff, you're right on. There isn't not one, and maybe I'm wrong on this, but I heard that there isn't not one single African American with the company inside this state doing over $1 million in revenue, something like that. That is awful. So I just think that I just want to say what you're saying and you're saying in terms of the debt, in terms of what The equity is problems.
So there's a couple of really different and distinct points, and I want to see if you want to respond to any of those. Maybe Glenn on the business side, maybe Kesha on the loan front. Just to say, start.
Yeah, I mean, I just a couple comments, and I was giving a presentation a while back around student debt, and I'm not going to get the numbers right, but certain African Americans who don't finish, and they come in, and they're actually in more debt later. So it's like, so again, it gets back to a structural issue. Why are we not finishing, and so on and so forth, and then we're coming out with heavier debt, which leads into this, bleeds into the same issue around, why do we don't have as many robust, again, Latino and African American business of size and scale in this region? And when I was coming up with my business, I could tell you there was more mentors who were in business of scale than there is today. So we know the stats have gone the wrong way, and I know there's limits to what we're talking about here today, but you have to broaden the conversation around the ecosystem. How strong is the ecosystem for these entrepreneurs to really grow? And so it takes a lot of things. It takes mentoring and coaching, and we need to subsidize that, or we need to make it more accessible. Smart strategy. It takes growth capital, affordable growth capital, which is not so accessible. And clearly, it takes contracts and customers and access to markets. And so all these things are critical if you're going to really get to the results we're trying to do, which is stronger companies, stronger, kind of what we call the entrepreneurial class, which is critical to these communities, but which, by the way, blacks hire more blacks, Latinos hire more Latinos. So that helps get to some of these issues around the employment piece. So again, I could keep going, but I do think that, again, to respect the topic of today, how does that relate back into monetary policy? I'll hand the mic to somebody else.
Yes. Well, just on the student question. So this is hypothetical, and then we'll go to another audience question. But Kesha, we talked a little bit about this. I'm curious whether the interest rates being so low creates a situation in which maybe debt doesn't seem very expensive, and students make choices about where they go to school and where they attend that may not be the wisest choice. And it's not because of the margin of interest rate, but it's just maybe more the atmosphere in which the decision is made. Or am I reading too much into this? I mean, does monetary policy play some sort of a role in student choices that I may not be aware of?
I mean, well, one of the bigger structural issues we're talking about is, where do young people get their financial information? Is it from parents, and are those parents well equipped to help them with that? Is it from friends? Is there a school program that comes in and takes them to a bank? When I was 14 and my parents were divorced, I was my father's bankable channel. He was an immigrant who didn't have access to a bank, so I cashed his checks and I helped him with his finances. And that was my first financial tool to sort of start to build my own self-sufficiency when my parents weren't there to teach me that. When you have young people who are trying to make this decision in a vacuum, we were also the generation, people may not remember this, but it was such a marker for millennials of my age. They would say, hey, buy, 10 CDs for a penny. And all of a sudden your parents are like, what'd you do? And you're like, I don't know, I'm like 12. And these are things that, our generation was the first to be marketed to as like, this decision can be put off till later. Go ahead and make the purchase now. And the biggest purchase you're going to make is that degree. And where you go to school, and if you even graduate in the first place, has so much to do with setting you up for future success or failure. So then the financial tools you have access to when you're at school, that's why we're having this conversation about colleges having food pantries and how kids are trying to just figure out how to pay their bills and graduate with some sense of an economic future at all. So without, trying to sound too despairing, one of the things that I think is a really important tool in terms of loan products, and I know that's also not just the interest rate itself, but, we've been talking about home ownership, and people in my age bracket and a little bit younger who are saying, I want to buy a home, but I can't take on more debt. We have to start developing tools so they see their home as income generating. And what I mean by that is, I turn my downstairs of my home in a rural community but near a hospital into an Airbnb, long-term rental space that pays more than my mortgage. It frees me up to have the income to do other things that I want to do. And every young person I talk to, I say, save up whatever you can and try to take advantage of first-time home buyer tax credits, whatever you have in your community, to buy a home, rent out a couple rooms. I tell the local Habitat for Humanity, you should make sure people can do Airbnb because it keeps you honest, keeps your house clean, and it gives you at least $1,200 of income a month. I mean, that's the only way I can see anyone my age affording being able to purchase a home. The hardest thing is to get a loan to do something like that. There are more nonprofits popping up around the country to help low-income people do Airbnb. And that is one of the only tools I can think of to own your own home and have a pathway out of poverty. And it was even hard for me to get a loan with a graduate degree. And so just having access to capital to start to right your ship is, you know, a challenge of what is the future of income? What is the future of work?
Yes, I see T, you want to get in. So
Just
so
one
quickly,
thing
and then we'll
right
get a quick
quick.
question.
Think about this. Grandparents love their children. So what do grandparents do? They co-sign the loan. And all of a sudden, they are burdened with an astronomical amount of debt that, oh, by the way, their grandchild won't be able to pay, so they have to. So here you are, people who don't have income generation to match the kind of debt that they have now taken on. And in many cases, back to what we've been talking about, people not having the financial acumen to really understand what they've just done, you can't get rid of college debt. Okay? You are burdened with it. Once you've taken out that loan, that is a permanent thing. And people, I see it every day that people are like, oh my God, I had no idea when I co-signed that loan what that was going to mean for me. So that's one of the big debts that a lot of older people have taken on. The other thing is that a lot of people from that age, that sweet spot again, between 50 and 62, you know what a lot of those people do? They go back to school. And why do they go back to school? Because they're trying to learn a new skill set, as we were talking earlier, to be able to get back into the economy to get a job. And so not only does it take them a long time once they've graduated to get that job, but now they're burdened with all that debt. So on both sides, it's a huge issue.
That's an interesting, very interesting point. And we have just a couple minutes, but I am going to take one more question. You had a question there, so please, let's get the mic. Wave your hand so the mic can get over to you. It's our final question. No pressure.
Oh gosh, I'm the final question.
No.
This has to be good. Okay.
Okay, second to last question.
Thank you. Susan Dickinson from United Way. I just want to thank the Federal Reserve Bank for being such a steadfast partner in our work, our shared work, to eliminate such disparities and really focus on economic equity through so many lenses as we do. And given that, with so many demographic groups represented, which is so wonderful and important, is there a best way to weigh all of these perspectives, and is there a rubric or an evaluation to be formulated, a formula to weigh all of these perspectives, and how do you evaluate the efficacy of monetary policy?
That's a terrific question. And as promised, I'm actually going to point this one over to President Rosengren in terms of how we weigh these kinds of decisions. I just want to say, he's the president of the bank, so he's my boss. But I did hear that Joanne was hiring bakers, so I do have a safety net in case this goes horribly wrong. So, President Rosengren.
Well, that actually was a great question, because by design, all three of these panels have a lot of heterogeneity. And so in this panel, rural Vermont is very different than inner city Connecticut, which is very different than how a Latino community or an African American community is feeling about the economy. And so unfortunately, we don't have, when we're doing monetary policy at least, we don't have tools that can target each of the various communities that are experiencing the economy in very different ways. There are other tools, and I think some of those other tools that have come up, some of them are fiscal policy, which we don't have any broad engagement in. But there are other things that we do that I think address some of the issues that have come up. Supervision is one of those issues. You don't normally think about supervision, but people talk about sustainability in the economy, and if you have a crashing financial system, it's not a good outcome for anybody in any of these panels. So it's really important that we get that right. CRA and the other regulatory things that we do make a big difference to access to credit, which has come up in this panel and came up in the other panels as well. And so working cities and the working communities in Vermont that we're about to launch is another example where we focus on community development that's really focused on low and moderate income individuals. And finally, the research arm, which I think is a critical component of the Federal Reserve System, and particularly for the reserve banks, because we do get into some of these regional issues and can help people that are on these various panels and really focus the topic on a public policy standpoint. So while monetary policy can't do all these things, we do have some other tools to try to address them. I would say weighing all these different interests are actually one of the big challenges for monetary policy. So if I'm somebody who's retired, I may feel very different about a low interest rate environment than somebody who's about to buy a house so that they can do an Airbnb. And I've never heard anyone pitch Airbnb as a way to keep your house clean. So thank you for that insight. I don't know if it'll work for me, but so I think it is important, though, for us to try to at least be cognizant of how different our policies affect different communities. And the last thing that I would highlight is the sustainability. So when we talk about sustainable low levels of unemployment and actually stable prices, there is a permanence to that we don't want to have big cycles. And that is something that our policy can do something about. So the one thing that hurts all these communities in significant ways is if we have a bad recession. And so avoiding serious recessions, and a couple people in the earlier panel highlighted that the people most affected by recessions tend to be people that are low income, tend to be people that cannot weather those kind of situations particularly well. So I think it's incumbent on us to continue to be focused on making sure that we don't do things that aggravate the situation and hopefully do things that actually moderate economic cycles.
Terrific. That concludes this panel. We're going to move to closing remarks by the Vice Chair and by President Rosengren. But before we do that, if you could just have a round of applause for this terrific panel. Thank you very much.
See whatever you want, and I'll finish.
I'll be very brief. I've done several of these, and I've benefited from each of them. Certainly this one, I think Eric and his team deserve a lot of credit for being very innovative in this, and a lot of what we're undertaking this year in the system has been motivated by ideas that have emanated from this bank. So it's been a very valuable morning and early afternoon for me. As Eric emphasized, we have a limited set of instruments. And I think it's important as part of this Feds Listen set of events for us to recognize that these instruments impact different parts of the economy in different ways, and it's useful for us to hear that directly. Models can only take you so far, and I think the listening events serve a very valuable purpose there. So thank you very much. Eric?
So thank you, everybody who's participated in this forum. We haven't done this before. I think it actually has been very successful in terms of hearing different viewpoints and getting perspectives that sometimes we don't hear nearly as much. So I think it's really important for the Fed to be reaching out into communities, and I know all the reserve banks do that in a very significant way. But I would say that it really is important from the Boston Fed's perspective to continue to hear various views about what's happening in the economy. It's going to be very hard to summarize in a very short period of time all the things that I've heard this morning. I would pick up on a couple themes that I kind of touched on with that last question. One is the heterogeneity in the economy and just thinking about rural versus city, employer versus employee, thinking about different generations, different ethnic groups, different genders. Everybody experiences an economy in very, very different ways. And so thinking about how you set a public policy that nonetheless addresses all the kinds of concerns that have been raised this morning is very, very difficult. And it is a very important process, and that's why I think it's good for the Fed to be listening and opening itself up much more. I started the morning talking about how different the Fed was when I first came here. You would certainly never have had this kind of forum. And if you had Chairman Volcker or maybe even Chairman Greenspan, I think it would be a little more oblique than some of the discussion that we had today. And I think it's actually a very positive thing that we are trying to understand how our policies do affect the community at large. The second thing that I would highlight is thinking about things over time, and that came up in a couple of the panels. So the sustainability thinks about not only what you're doing today, but how what you're doing today affects things over time. And in fact, in this panel, we talked about it for individuals. And when you take out a student loan, you have to be thinking about, can you afford it? What is that going to mean for future jobs that you're going to have? But are you going to be able to sustain the debt over time? Should you major in classics? Should you major in economics? Should you go into a STEM field? All those kind of decisions are all interrelated and have impacts over time. Well, the same thing's true for monetary policy. If we try to gun the economy too much at a point in time, it's probably going to be at a cost at some point in the future that we have to tighten policies up much more and actually create more hardships over time than what we had intended. At the same time, being too timid can have very large costs as well. So we don't know where full employment is in the economy, and the only way we do that is partly by experimentation, to understand how far can we push the economy to get a very strong labor market without kindling problems in asset markets or kindling problems in other areas of the economy. So there is a lot of art to central banking, and that's something that requires the kind of judgment that we have at the Board of Governors and at the Reserve Banks that hopefully can help us think about these intertemporal decisions, these decisions that we have to make that we don't want to do just for right now, but really do for a much longer period of time. And then finally, I think this whole forum has highlighted that while we're trying to address monetary policy in this forum and the exercise that we're going through in this year, the Federal Reserve touches communities in many different ways. And it's really important for us to continue to think not only about the very important role that we play in monetary policy, but also understand all the other activities that we do and why it's so important for the communities we're in. So I want to thank everybody for participating. This was interactive. I really appreciate the people that came and participated as the audience, but a particular appreciation for those people that agreed to put themselves out and be on the panel. So thank you, everybody, and have a great day.